Hi, everybody. Welcome to the Grant Funding for Small Businesses group. And if you're watching this video, you're either catching me in the group or you're catching me on my YouTube page. So I just want to let you guys know that if you are watching me on YouTube and you're not in the group, you can actually find the group by using the link that I'm going to post in the show notes or the comment section. And just go ahead and complete the information so that I can add you into the group. In just a second, I'm going to tell you what this is all about. Also, for those of you who are in the group and you would like to find me on YouTube, I will do the same. Check the comment section or the notes, and I will give you my YouTube information. So the grant funding group is basically to connect people who want grants, which I call them my grant getters, to people who give grants, which are the grant funders, okay, or the grant givers. And there's certain things that a business has to do in order to qualify for them. First, you have to fill out the application, and then you also have to supply documentation in most cases. Many businesses do not do either one of these steps because they don't know exactly what they need to do in order to apply. Now, of course, we can't guarantee that you're going to receive the grant after you apply for it, but we can at least simplify the process, make it easier to understand, and help you develop a strategy and get the information that you need in order to complete the application. On top of completing the application, you also need to provide documents. Sometimes those documents could be your accounting reports, such as a profit and loss statement. Other times it could be a tax return. Sometimes they want to know about what you're going to do with the money, like what your future plans are. And most of the time, they want to know that you are going to be able to survive after they give you the grant, right? They want to help people that are helpable. All right. This is basically how it works. They want to make sure that your company is going to sustain itself after you receive the money. Because if you can't, what's the point? Now, we're going to talk today about your revenue, which is why I have here on the screen that I'm sharing understanding your revenue. Because one of the major parts about getting your accounting records together, getting ready for a grant, is to understand your revenue and also to be able to calculate it. Now, for this week, the homework was for you to calculate your revenue. If you didn't do it because you need help, this video should be able to help you out so you can understand it better and then do that simple calculation, which is just adding it up. Let's go ahead and get started. You need to know that the revenue is the heartbeat of your company, is basically what is keeping your company going. This is the reason why you're in business. If you are in business and your reason isn't to earn money, then I'm not sure exactly why you have a business. It's either a nonprofit organization where you're giving back or it's a hobby. But in the end, you still need to be able to bring in revenue to keep it going. Now, your revenue total, and when we talk about calculating a certain dollar amount, that is usually over a period of time. And that time period could be a week, it could be a month, it could be a quarter, or even a year. Okay. It really depends on how often you're making sales for you to be able to decide on um, if you're going to calculate your revenue daily or if you're going to do it weekly or monthly. If you're making a ton of sales, then daily is best. If you're making sales like here and there, then maybe monthly is a better fit for you. That's something that you have to decide. And it's something you can decide after you actually learn the steps and start doing the steps. Next are 4 points that I'm going to cover today. Why is revenue important? What type of documents do you need to gather? What is revenue? Like, what are the different types of revenue that you can actually have in your business? And then what tools can you use to calculate it? So the first part here, which is why is it important? So revenue is important for three reasons. The first one is managing your accounting records. This basically helps you know, okay, here's a financial position of my company. By having revenue, that is the first component of a profit and loss statement. So by having that piece in there, you're able to move forward and continuing on developing this statement. Now, there are other components of it, which we will cover as the weeks go by, but revenue is the first part. You need your accounting statements because they help you determine a lot of things financially within your business, and they also help you see where your growth patterns are. You may want to pay yourself. Okay, you may want to bring on an employee. You may want to make a purchase of something. These financial statements can help you with that. Next is understanding cash flow and your budget. So, kind of like attached to what I just mentioned earlier with revenue, understanding your cash flow lets you know at what period in time you can actually afford to pay for something. Maybe you receive a bulk of your money in the beginning of the year and not so much in the middle of the year. And so, when you notice these patterns, you're able to actually lay things out or schedule things out or plan it out to where you know, okay, let me purchase this piece of equipment in February rather than trying to purchase it in June. Also, with a budget, you'll be able to plan out what you can afford to buy for the year. So just because you receive the majority of your money in the beginning of the year, right? Let's just say your cash flow leads to like the majority of your sales come in at the beginning of the year. That doesn't mean that you can still afford something throughout the whole entire year. So if you purchase it in February, it doesn't mean that it's not going to hurt you later on in June or in, say, November. You have to actually understand how much you can afford and what your limitations are. And that's why a budget is important. Next is trends and growth. So your revenue will be able to tell you how far you've come with your business over a certain period of time. You may want to look back on 3 previous years, or even 3 previous quarters, or even 3 previous months to see, am I gaining in sales? Am I getting more customers? This is very important for grants because they want to know, again, that your company is going to be able to sustain itself. Now, I do want to be clear on something. If your company is not doing so great, it does not mean that you will not be eligible for grants. It just means that you have to be aware of where your weaknesses are and you have to be able to improve them. And the grant money will actually or could be what's going to help you improve. It could be that push that you need to get over that hunch. For example, let's say you need grant money to improve your technology because you know that if you had a better system, you can serve more clients more effectively. Okay, that's a way that you'll be able to get over that boundary that you're currently facing and become sustainable. Let's see here. We're going to move on to the next one, which is part two. And this is regarding the types of documents. So there's a long list here, and I will put it in the comment section so that you'll know. But the types of documents that there are business generated documents, which are like your cash register receipts. We have your receipt books. Okay, so if you actually handwrite out a receipt and give it to someone, you can also use invoices. Okay, those are examples of business generated documents. Bank and other entity documents. An example of that would be your bank statements. Or if you take credit card payments, then those credit card companies actually give you a credit card statement as well. So you can see not only how much money you've earned through credit card charges, but you can also see what your fees are. Because when you're accepting credit card payments from customers, you have to pay a fee to the credit card company for processing that payment for you. And then we have tax documents. And that could be basically in a form of a 1099. Maybe you have a 1099 interest form or a 1099 miscellaneous form. So these are the types of documents that will help you track your revenue. Next is part three. And part three is the type of Revenue. Okay, so there are different types of revenue here. Okay, and sometimes people think that revenue is just all one category and you just add everything up, group it together, and there you go. There's your number. But it doesn't work that way. And I even have an additional category here which says mistakes. We'll get to that. I'll explain why that's there in 2 moments. But first, let's talk about sales. Your sales revenue is just that. If you're making sales in your business, then that's what you need to categorize it as and put it toward. Now, your sales could be for products, or it could be for services, or it could be for both. So, if you are making sales for both, you definitely want to separate that so you know how much you've earned off of your services and how much you earned off of products. Next would be revenue from investments or just unearned revenue, right? So this could be in the form of, say, interest. You have a bank account, you have money in there, and you're now receiving interest payments from the bank because this money is sitting there. That's revenue to you, okay? That's income. That's something that you need to be aware of because it's money coming into your company. You could also have products or items that you, or I should say, property. You can also have property or assets that you are selling and now you're gaining off of it. Let's just say, for example, you purchased a piece of equipment, you used it for 5 years, and now you want to upgrade to another piece of equipment. So you sell the equipment that you had and you use that money to purchase another one, right? Well, the selling of that property generates income for you, and you do need to document that, okay? Next, we have mistakes. And the reason why I have mistakes on here is simply because if you're not keeping accurate track of your revenue, certain things that are not revenue could be considered revenue because you haven't done a good job with managing that. I'm going to give you a great example. Let's imagine you're new in business and you have to put money into your company, your own money. You have to put your own money into your company because you're not making enough in sales to cover your expenses. Well, if you're not keeping accurate track of that and you happen to go through an audit, the money that you're putting in may be considered as revenue. Okay, and that is a terrible thing for you because that makes it taxable. So you want to keep track of money that you're putting into your company. That's your own money. So you would be able to know the right amount of taxable money versus non-taxable money. Okay. Also, a lot of times when I'm looking at people's accounting records, I notice that they usually put loans under revenue. Like if they received a loan from the bank, they put it in as income. So a loan is not income. But if you aren't doing the proper accounting of your systems, you may make a mistake and then it's booked and logged in that part. Is it fixable? Absolutely. But before it's fixed, it's distorting your numbers. So part 4 is the final part. We're going to talk about how to calculate it. And so basically, I gave you this list here. I'm going to put it in the comments. It's a list of the following information that you should be documenting. Of course, you can add on to this list or you can remove some things from this list. But this is a great start for you if you're unsure of what you should be looking at and what you should be doing. And this here is a screenshot of a tool that I created in Google. I will attach the link for it so that you all could use it. Just today is December 16th. The link will be attached by December 17th, okay? So this link will allow you to be able to use the list, right? You see this list here, the name of the client, the date, and stuff like that. This will allow you to enter this information on the spreadsheet. Now, this spreadsheet is in multiple parts. I had to separate my screenshots so it could all fit on the screen. But as you can see here, there's more columns to it. Okay, this is the first picture that I took, and this is the second. There's like other parts to it as well. I'll share that. I'll also share a video on how to use the spreadsheet in case you're unsure. So that is it. Now, if you want this tool, if you want me to DM you the video on how to use the spreadsheet, go ahead and just comment, share with me. Okay. And also, if you're watching this on a replay, I should have said this earlier, just comment replay. If you left a comment for me anywhere, I will go back to it and try my best to answer all comments, or I will create a question and answer session and just answer your comments and your questions in that particular session. I hope this was super duper helpful. Thank you for tuning in. And again, if you're watching this on the replay, feel free to say hello and leave a comment for me. Okay, bye.